Welcome to the Coronavirus Freight Market Update for April 30th, 2020. My name's Kevin Hill, joined here as always with Michael Vincent.
Welcome, everybody. This is our twice weekly coronavirus news and market condition update. It's an interactive show, so get your questions in on FreightWaves, LinkedIn, and Facebook, and we'll be happy to answer those on the air. Who do we got today, Kevin?
We have Andrew Cox with the headlines as always from FreightWaves.com. And then we have our lead economist here at FreightWaves, Anthony Smith, joining us to talk about the jobless numbers that were published this morning.
Yeah, we do have those. And speaking of numbers,
let's go
by the numbers. So we do this update. So on Tuesday, the coronavirus case count in the U.S. was at 1,011,408, and now we're at 1,066,881. Deaths were at 56,855. We are now at 61,797. When we started this, March 17th, for the baseline, we were at 6,344 cases and 110 deaths. Of the closed deaths back then, the death rate was at 83.67%, and the recovery rate was at 15.79. Now the death rate, they flip-flopped, and the death rate is at 29.49%, and recovery is at obviously 70.51% if you can do the math. Now, the daily cases had been coming down. They've spiked in the last 2 days. Yesterday actually hit 2,390. So a slight uptick there, although the curve is flattening, obviously. According to the IMH, the peak was on 15th of April at 2,618, and that appears to be holding. It was projected to be 2,151, so it was above the projected. And total deaths now, they've increased it again a little bit now again, Kevin, to 72,433, with a flattening curve really in mid-May. So I guess that all depends on how well we open the economy and keep social distancing and keep people safe as we try to get the economy back rolling.
Yes, well, let's hope we keep that peak flat and get down to the backside of it, and we'll go on. So let's flash over to the news. Our top story on FreightWaves.com right now is C.H. Robinson and earnings. How is that playing out, Andrew Cox?
Yesterday in their earnings call that they were furloughing, 7% of their workforce for the next 90 days. These employees will retain their medical benefits and some other benefits, but they will be without a paycheck for 3 months. They'll be able to apply for the CARES Act for the unemployment benefits through the federal government, but won't be receiving a paycheck from C.H. Robinson. C.H. Robinson, although they've operated fairly well, they know that the next few months are going to be really tough, so they're cutting costs wherever they can. Before this latest furlough, the company had already cut executive salaries and cut some board member pay, among some other cost-cutting initiatives.
Thank you very much, Andrew. And you can find the full article on FreightWaves.com from J.P. Hampstead. Moving on to Tesla and Tesla earnings. How did that play out?
Yeah, of course, everyone wants to talk about Tesla. They actually surprised investors once again. They posted their first ever quarterly GAAP net income this quarter. And this happened, during a really seasonally poor quarter. They were actually able to expand gross margins pretty significantly over the past 12 months. And they were able to cut operating expenses 13% in the past 12 months. So that's really strong for Tesla. And they also had one other thing that's really good news is the Model Y, their new crossover SUV that came out recently. This is the first new product that they've ever had to be profitable within its first quarter. So that's good news moving forward for Tesla. And they also had the only bad news for trucking, or a little bit of a downside here, is that they did postpone their plans for the first delivery of the long-awaited and much-hyped Tesla Semi. I think now that they're pushing back first deliveries to 2021, that's a one-year extension. But they also had some other news they're expecting to do a big announcement on what they're going to call Battery Day. It'll be in the next couple months, depending on when it is safe to do some sort of public event. But they're going to have they say, one of the biggest news days in Tesla history coming up in the next couple months.
So, Andrew, just interesting on that, just a quick question. I don't know if you have any insights or thoughts on this, but so their flagship facility in Fremont, California, shut down in the first quarter, right? And you've got Elon tweeting and saying, "Free America now, it's fascist that we're on lockdown." Were there cost savings out of that are reflected in these numbers?
I'm not sure about the cost savings so much. He definitely has been outspoken and adamant about reopening America, not only for the reasons to get his plant up and running, but he says that it is, as you say, fascist to keep America's freedom locked down this much. I'm not sure about the cost savings, but you are correct. He's been adamant about reopening the country.
Gotcha.
And Schneider also did their earnings recently, and it's up on FreightWaves.com. What are the highlights from that, Andrew?
Yeah, so Schneider beat expectations. They reported first quarter EPS, earnings per share, of 24 cents. Revenue in total was down 6.3% year over year, but most of that was attributed to the closure of its first to final mile division, and also they lost a big import-export customer, so they say that weighed down on revenues as well. But again, just like C.H. Robinson, management is expecting Q2 to be the worst of it, and they're buying into the back half recovery picture that a lot of us here at FreightWaves are also calling for.
So along with that revenue decline being part of it being attributed to the first to final mile service offerings, was they were able to save a lot of losses too. Wasn't that a kind of a loser for them?
Yes, it was a loser. They were shutting down something that wasn't performing all that well. They saw revenue down across the board. I believe their truckload revenue was down 11 or 12% year over year in the quarter. And then they also mentioned that April volumes were trending downwards in the high single-digit range, which is similar to what we've seen in the outbound tender volume index and in line with what we've heard from other executives.
We have some news on smaller fleets out there, don't we?
Yeah, we do. So Overdrive Online has been doing a weekly survey. This is the 5th one they've done, just asking small owner-operators and basically mini fleets of less than 8 trucks, what's going on for them. And they came back with the worst results this week. 35% of the survey respondents say they've completely shut down their truck, completely idled. And then another 53% say that they're running far less than usual during this COVID-19.
In the environment right now that we see in Sonar on outbound tender rejection rates probably goes hand in hand with that, 2.5%.
Well, the rejection rates certainly are down, right?
Mm-hmm.
And volumes are starting to trend back up. But there's excess capacity. I thought it was interesting too, Andrew. Do you have any take on the survey and what they were asking about their expectations moving forward? I saw that there was about 50. It was about 50-50, right? It was about 49% were expecting a decrease, and I think there was somewhere in the neighborhood of 17% expecting an increase. The rest were kind of like it's going to stay flat for a while.
Yeah, that's kind of in line with what Kevin and I have seen in our quarterly surveys to carriers. Most of them they're a bit confused. I mean, there's so much uncertainty right now. We don't know when volumes are really going to pick up to pre-crisis level. It's likely going to be months before that happens. So carriers are in the middle. They have mixed expectations right now.
And going back, another rough patch for a digital online freight brokerage, Transfix. What do we have on that?
Yep, Transfix announced that they would be laying off 10% of their 240-person workforce. 24 total employees were laid off. The 2 people in the company, it came as shocking and surprising, but to many on the outside, we know that this is a really tough time for all brokerages, especially those digital freight matching type companies like Transfix and Convoy and Uber. We've heard reports that Uber may be doing something with their freight division. So, it's a tough time for the digital freight matching right now.
It's definitely a market in turmoil.
Yeah, why do you think that is? Do you have any thoughts on that?
I think
is it skewed more towards the digital brokers that are taking the heat for this?
I don't think so. I'll let Andrew answer that actually.
Well, I do think most brokerages across the board are hurting, but it's especially difficult in a time for the digital freight matching guys because they've been relying on basically buying market share out and taking very little margins. And now that volumes have plummeted, you're taking basically no margin on fewer volumes. So it's a really difficult time for them right now. At least with the traditional brokerages, they do have some margin there. They've got some seeds already planted to be able to pull some levers and make sure that they stay afloat during this time.
Yeah, I would think, and really to both of you guys, just a thought off the top of my head is I had this discussion with Craig Fuller, our CEO, a couple weeks ago, just talking about a report and some quotes from Ravi Shankar. And so is it a case where, rates are so low right now, it's not a cost type of thing. There's not this cost savings look for it, and it's more trusted, and you need that relationship, and they can control the carriers more through a traditional broker, or straight to the carrier than through the digital freight matching?
Kevin, you want to take? Well, I can take a stab at that. I think the relationships are most important right now. We've talked about this ad nauseum that they're offering a lower rate to go on these digital freight matching platforms, but as soon as their margins, as soon as they get the opportunity to expand their margins, they're going to try to do that. But most of what they are offering right now is cost-based. So as soon as their costs are rising or in line, I think that a lot of people may jump ship and go back to their legacy relationships that they have withstanding.
So, Andrew, we've been hearing a lot about Phase 4 of the stimulus package and infrastructure. What's the latest news on that?
The latest news is that Senate Majority Leader Mitch McConnell told Republican colleagues that there's a need to get the message that infrastructure is off the table. It's back and forth. I mean, John Gallagher, everybody's expecting that this fourth wave will be heavily influenced and be focused on infrastructure, but they're going back and forth. The Senate and House Republicans are going back and forth on this right now.
Very good. What else do we have on the headlines for on FreightWaves today?
We've got a little bit on the rail traffic. This is, it's not shocking to anybody to see this, but it is brutal to see the data come in. The effects of the COVID-19 pandemic are really weighing heavily on rail volumes. They're now down 22% year over year. So rail traffic is extremely down, just as traffic on all freight is down, but rail is hit especially hard right now.
Thank you very much, Andrew.
Thank you, Andrew.
So, Michael Vincent, while we wait for Anthony Smith to get situated, what are we seeing in Sonar?
Yeah, so in Sonar, as we were talking about briefly earlier, so tender volumes continue to rise a little bit, right? I mean, there's a definite good uptick. It broke 9,000 again.
I think we have enough of a trend to call it a floor and a recovery.
It certainly appears to be, especially when you look to what is going on in the economy, right? You got produce season upon us, so most of this recovery, or almost all of this recovery that we've seen, if you can call it a recovery, the uptrend breaking 9,000 just barely. I think it's 99,000.36. I think is downtown today. Has been driven by dry van. So reefer really hasn't seen that yet, but with produce season, you would see that start to support the outbound tender volume index as well, auto manufacturing, et cetera, coming back online, you would see continued support. So, all kidding aside, I think Craig Fuller's 9,300 by May 15th. I think May 15th is too late. I think it'll hit it before then.
It's looking good, that call.
Yeah, I think early next week, really.
So we have Anthony Smith all set up now, our lead economist here at FreightWaves, and it's become a tradition now on Thursday mornings, the initial jobless claims numbers, not really for good reasons, but it's still huge news. What do we have today, Anthony?
That's right, Kevin. Every Thursday for the last year plus, I've been monitoring weekly jobless claims, been telling people about it. I didn't think it was going to catch on, but unfortunately is right that there is quite a substantial number for jobless claims. We saw a 3.8 million increase for the most recent week. So this is, of course, a slight movement down, but still a very, very substantial number when we're looking at the overall trend.
So were we more than 30 million now?
That's right. We're just coming up on 30 million over the last 6 weeks, and that's going to really kind of take a look at the length of the coronavirus pandemic, or when everything starts to ramp up. So really, 30 million essentially erases every single gain that we had in the employment sector since the Great Recession in 08-09.
Wow. All gone.
All gone.
So is this indicative of the companies really looking towards this recovery and not sure how it's going to go? I mean, so we thought we were kind of hitting the bottom of, most of the industries that were shut down were laying off the people and had, so we'd see it start to slow. But it is slowing, but 3.8 million is a lot. Is still a major uptick in new unemployment claims. Is this people preparing for and trying to be as lean as possible to try and regain losses in the first quarter as we try and ramp up, you think?
Well, Mike, I think when we're looking at this, one of the things that we first outlined when we started looking at the substantial rise in jobless claims is how unprepared some states are going to be for this. And because this is a state-by-state survey that's put out, and states are being overwhelmed. So I'm thinking that there are still a substantial amount of people or individuals that are looking to file for jobless claims, anywhere in the millions, upwards of, I've heard anywhere estimates of 9 to almost 15 million Americans that are still looking to file for jobless claims and unemployment benefits that are unable to, just because so many state systems are being loaded with amounts of claims coming in. The other thing that we have to look at is not as appealing of a number, but I would recommend a lot of people to look at this, is continued claims. And that's going to be looking at ongoing issuings of unemployment benefits. I know the initial jobs claims is the one that's really getting headlines right now, but continued claims is going to be one of the ones to watch to see when things are really starting to come back in line. The latest numbers showed, I think it was just around 17 million or 17.9 million continued claims. So that's really showing that out of the last few weeks is still kind of increasing. People don't really look at this as much because it's not as much of a sporadic mover, in addition to it being a week behind the initial jobs claim, so it's a little bit lagged. But this is going to be one of the areas I'll be watching closely, just to see if continued claims are starting to come down. That will start to tell me that there is some kind of substantial decline or some tempering in the overall employment market.
Anthony, how about personal income outlays? The jobless environment is definitely going to affect that. How is it affecting it right now?
Right. So for the latest numbers for personal income, I believe there was a decline of around 2% for the latest month through March, which is 2% on the surface level. Doesn't sound like it's a huge drop, but typically when we're looking at this, we're seeing tenths of a percent. You know, we see upward movements of 0.2% or 0.5% or downwards movements of 0.3%. So a 2% drop is very substantial. And the other thing to keep in mind here is that this is for the month of March. And so we had a somewhat normal start to March for the first week or so. Things definitely ramped up towards the middle of March. And then, of course, towards the end, it was all gone after that. But knowing that this is for March and that there was some normalcy to the start of it, compared to what April's going through, this is really telling me that we are not seeing just the worst of it just yet, because April is surely going to have a lot lower numbers here. We're looking at income coming in for individuals. And that's really going to transfer not just for spending, but as well to real personal disposable income. And so when we're looking at that, that's really going to be telling for how consumers are going to be managing their funds that are coming in right now, if they're going to be able to cover their bare necessities. In addition to many businesses that are looking to come back online, those individuals that have been furloughed that aren't back in work just yet, are they going to be able to contribute to the economy after being able to meet their bare minimums? And so right now, so many Americans are living in different realities. We have people that were already living check to check that are really been, just completely blindsided by this whole pandemic. Then you have Americans that are, of course, been able to be fortunate enough to work remote and kind of stay still in the action and, hunker down at home. And thankfully, they've also been able to contribute and be able to shelter in place, things like that. But that just goes to show that there are so many people living in different realities right now. And so that really kind of ties together that this is very much a very chaotic and unprecedented time right now. We're looking at the economy.
Yeah, when you think of it, you speak in terms of percentages, and 2% in personal income is $382.1 billion, right?
That's right.
And disposable income, it's $334.6 billion. That's a lot of money going into, or that would be going into the economy that is not, and going to be very difficult, or going to definitely be an anchor weighing on the recovery, right? As you're talking about, people are going to be holding on to their money a little bit more, a lot more in some cases, I would think so.
That's exactly right. It's going to change essentially, I think, the landscape of many Americans. And we start to see people, the psychology of individuals. Of course, we look at economics and social science, but I'm not a psychologist or behavioral analyst or anything like that. But when we're looking at how people react to things like this, of course, there's going to be some that are going to be molded by this. Definitely younger individuals that maybe they're going to be shaped by this, and this is going to change their trajectory from life here on out, from their seeing how some of their parents are going through this or family members or things like that. But it's going to be interesting to see how many individuals are going to start saving a lot more just to have something put to the side in case some kind of black swan event happens again. Of course, I think majority of Americans, when things like this happen, maybe they'll change for the first month or 2 or 3, then things kind of start to get back to normal, and then it's just business as usual. So when we're looking at the recovery side, it's definitely going to be interesting to see how many Americans are just going to be flooding back into normalcy and how many are going to still be a little bit reserved. Of course, I think there's going to be an overwhelming amount of people that are going to be a little bit reserved, especially those that are maybe in the aging population, or maybe they are, of course, immune, deficient in some way, shape, or form. But when we're looking at individuals that are just looking to get back out there, it's really going to be interesting to see how that really shapes this recovery.
I think we both definitely agree with you on that point. It's going to carry on with our psyche for a while. What about the USMCA? I've been hearing not rumors, but chirping about that. What does that look like right now, Anthony?
Right, so we're looking at that. There's a lot of resistance for any kind of trade policy to be put in place, even if it is seemingly to be to the benefit of North America. I think that's just because there's so much going on right now. And so one of the last things many individuals that want to see is any kind of disruption or any kind of changes happening right now when there is already so much uncertainty and already so much change happening. So a lot of people are looking to say that, hey, there is a lot of instability right now. This is not the time or place to kind of push this policy forward. Of course, when we're looking at overall trade, putting any kind of preferences aside, a lot of emphasis should be, of course, put on the recovery effort. Of course, those essential materials, when we're looking at medical devices and things like that, also should be pushed forward. But we're looking at North American global trade. A lot of individuals have resistance towards that just because this might not be the best time for it, given the landscape of everything.
Thank you very much for those economic insights, Anthony. Have a great day.
Of course, thanks for having me.
Yeah, interesting stuff. When you look at the consumer sentiment, I kind of looked at it. I mean, it's obviously a big part of the economy and our recovery as well. And when he's talking about the psychology of it, and I agree with him, he's not a psychologist, and neither am I. But you're starting to see reports, states are trying to come back online, restaurants opening, et cetera. But I'm starting to see reports where restaurants are having a difficult time getting people hired.
Yeah, it's going to be a bumpy ride bringing the economy back online. It definitely is, and it's going to be unlike anything we've seen, either of us, certainly. It's going to be a bumpy ride. There might be small outbreaks here and there. It's going to be something that is going to be hard to design. It's just going to be you take it day by day and accept those challenges and overcome those challenges as they come up, because we're going to have a lot of unknowns out there as we go back online, kind of matching as we shut down the economy. There's a lot of unknowns as well. Yeah, absolutely. So let's talk about something good.
Let's talk about something good.
I'm ready to talk about something good. Definitely.
So the feds are delivering 1 million masks for truck drivers across the U.S., right? From FreightWaves article. Truck drivers nervous about a lack of protective gear as they move freight across the country during the coronavirus pandemic are getting relief from the federal government, right? So the FMCSA is delivering 800,000 protective masks to inspection stations, highway patrol field offices, and other sites along the interstates and highways. Another 200,000 masks are being delivered directly to motor carriers for distribution to their drivers.
That's great news. It's great news to see PPP, or not PPP, but PPE. PPE. And
to keep up with
all
these
the other
acronyms, man.
essential resources getting to where they need to go to help us all fight the coronavirus epidemic.
Yeah, absolutely. And I've heard a rumor that something really big and cool and good and actually badass is happening next week. Have you heard that rumor?
I don't know. Why don't you fill me in on it, Michael Vincent?
Apparently, it's called FreightWaves Live at Home, May 5th through 7th.
I have heard of it, yes.
Do you have any details on that for us?
I do have some details. It's May 5th, 6th, and 7th, and it's all virtual at home on FreightWaves.com. It's free, open to the public. We're going to have some of the industry leaders in both trucking, logistics, the technology that supports it. I believe it goes from 9 o'clock to 4-ish, 5-ish. We keep on adding new content to it. I think there's going to be a lot of what the trucks little snippets, right?
Yeah,
I
we're
mean,
gonna-
having
yeah.
like 5 with the trucks.
Yeah,
We're going to have great quarter guys on there as well with Ben Gordon, and also Put That Coffee Down with George Abernathy, which is great. But we have all the industry leaders. Everyone's doing Skype calls and connecting and joining us, and we're broadcasting live from Chattanooga, and it's going to be all the fun of FreightWaves Live.
Yeah, it's going to be awesome. It's going to be awesome. It's going to be badass.
It is going to be.
I'm really
badass,
looking
yes.
forward to it. It's going to be fun. It's going to be interesting to see how this goes.
It is.
People have been working, and Phil Moody, our chief of staff here at FreightWaves, has been putting a lot of stuff out on LinkedIn, et cetera, pushing it and really giving kudos to the media team and production team working tirelessly and the event staff to put this together. It's really going to be cool.
It's going to be
some
packed
really
of
good stuff.
content and what's going on in the market right now. We have, I can't remember the gentleman's name, but one of the keynote speakers led the charge on the Ebola
Yeah, the Ebola czar.
The Ebola czar. So that'll be a very interesting and timely talk that we'll have.
Yeah, they've got it set up for interaction through Slack with the different vendors, with the different the demo companies, et cetera. So it's going to be really cool. It's going to be really cool.
Shelley Simpson from JB Hunt.
Yep.
Doug Wagner from Echo. Derek Leathers from Warner. They're always all speaking.
Right on.
And it's just going to be an exciting event.
I'm looking forward to it. So that's the 5th, 6th, and 7th, right?
5th, 6th, and 7th.
So
next week, Tuesday,
FreightWaves
Wednesday,
live at
Thursday.
home. It's going to be awesome. No flight, no hotel.
Just show up.
That's exactly right. That's
Just show
exactly
up.
right. It's going to be awesome. So, freight forecasting today.
Great forecasting.
At 4 p.m.
And you're
The
what are you-
5 must-have dashboards. Anthony Smith and I go through the 5 must-have dashboards from the C-level suite all the way down to the brokerage boiler room floor. What you need to be watching as we go through
It's
this
a nice
recovery.
quick hit too, because it's a 30 minutes.
It's a 30
minute show. So
a
those
lot of
5
information
modules,
we're gonna
you're going
try.
to get nice and to the point information on that, right?
Yeah, that's right. So check it out, because and afterwards you hit me up on LinkedIn or Anthony Smith on LinkedIn, and I will send you Sonar users the links to these 5 dashboards. They're very good. Don't miss it.
Great. And I think that wraps it up for this episode of the coronavirus freight market update.
It does. So where can they find this show? They can find this show on demand by downloading the free FreightWaves TV app, and you can listen to it exclusively by subscribing to Freightcasts on your favorite podcast player. Stay tuned to FreightWaves Forecasting at 4 p.m. Eastern today.